Avoid the penalties, maximize your deductions, and stay one step ahead of the ATO. No one loves doing their taxes, but if you own an investment property, this is one of the rare times the system can actually work for you, if you know how to play the game. Now this video is called 7 Property Tax Moves Every Investor Must Take, and that's exactly what we're diving into today. I'm Lloyd Edge, property investor, buyer's agent and author of Positively Geared. Now just to be clear, this is not personal tax advice, but it will help you ask smarter questions both to yourself and to your accountant before it's too late. Because here's the truth, there are 2 types of property investors when it comes to tax. Those who get caught out by changes and those who claim every cent they're legally entitled to. So, which one are you? To find out, let's break down the 7 key tax moves every smart investor should be making this year, starting now. Let's do this. Key tax move 1. Meeting the deadline or risk penalties. The key date, 31st of October 2025. Miss it and the ATO can hit you with penalties or interest. So this tip coming up might seem like a loophole, but it's actually just a smart move. If you're using a registered tax agent, you'll often get more time, but only if you're signed up before that date. Don't leave this to the last minute. Even a 1-day delay can cost you. $1 saved is $1 earned. Key tax move 2. Use a registered tax agent. Apart from the reason just mentioned, using a registered tax agent is more than just admin. They're up to date on new laws, trained to spot deductions you may miss, allowed to charge a deductible fee. Plus, they're legally required to act within the Code of Professional Conduct, so you get protection and peace of mind. Key tax move 3. Maximize your deductions legally. This is where most investors leave thousands on the table. Repairs and maintenance, replace broken items, deduct them. Capital improvements, add a new deck, claim it over time. Borrowing costs, broker fees, LMI and loan docs are claimable. Interest on loans for purchasing, renovating or repairing rentals. And remember, no records, no refund. Keep everything for at least 5 years. Key tax move 4. Follow co-ownership rules. While this doesn't apply to everyone, it may affect you in the future. If you co-own a property, you can't make up the rules. The ATO requires you to split income and expenses based on the legal title, not your own arrangement. Joint tenants, it's 50-50. Tenants in common, go by your actual ownership share. For example, 70 and 30. This includes rent, deductions and capital gains. So make sure your claims line up with your paperwork. Key tax move 5. Claim depreciation the right way. Most investors ignore this and it costs them. You can claim depreciation on carpets, air cons, dishwashers, blinds and ovens. Even second-hand items can qualify, and if they're under $300, you might deduct the full amount immediately. The right way? Contact a quantity surveyor and pay for a quantity surveyor's tax depreciation report. In fact, reputable surveyors guarantee that the cost of the report will be offset by the savings. Key tax move 6. Understand capital gains tax before you sell. Selling a rental property? Here's what to know. If you've owned it more than 12 months, you could get a 50% CGT discount and costs like stamp duty, agent fees and renos to your cost base. Here's a hot tip. The contract date, not settlement, determines the timing of CGT. And if it's jointly owned, CGT splits just like your income and expenses. Plan ahead or you might owe more than expected. Key tax move 7. Stay ahead of tax law changes. Here's what's new in 2025. Federal proposals. These are not law yet. Cap negative gearing and CGT discounts to just 1 property per person. ATO crackdown on short-term rentals. More scrutiny on reporting and deductions. State-based changes. Victoria, 7.5% Airbnb tax. ACT, 5% short-term levy. New land tax brackets and stamp duty concessions. These can erode your profits if you're not across them. Now, very important. This stuff might sound dry, but it's often the difference between a profitable portfolio and a portfolio that's just treading water. If this helped you, give it a thumbs up and hit subscribe, because in the next video, you'll want to keep watching to keep leveling up your property investment knowledge.